Hello again, everybody. This is Matador from freetradingvideos.com. It's about 12:30 p.m. on April 7th, 2009, and I wanted to answer some questions that people had posted into the comments section. I'm going to try to make a regular habit of this. This one's going to be a little bit of a longer video since I'm going to go through several days worth of questions. So hang in there. If I don't get to your question, do me a favor and repost it. Throw some good comments in there, and like I said, I'll do my best to answer those on the fly from now on. So we'll go to videos, over here Matador, and we'll just go from yesterday and work our way down. Alright, so 7 comments in here, we'll pick one. So we'll just go top to bottom also. So again, it's going to be a little bit quicker than having me type in things. Even though there won't be the written down answer, you can sort of relive these videos at will. So on a day like yesterday, when the trend and the VIX and all those things were sort of mixed a little bit, kind of like today, the question is, or a thought, is to kind of just sit on my hands and watch. Actually, what I'm doing when the broad market internals are mixed is that, again, I'm looking for relative strength and weakness stocks. And there are times when those are the ones that are waving a flag, saying, hey, here I am, look how much stronger I am than the broad market. Depending on which way the market corrects then, I'm either going to get out very quickly or I'm going to get a nice ride out of it. So if I'm looking at a relative strength stock in a mixed broad market environment and the markets fail, then typically that relative strength stock won't fail as quickly as the rest of the market. Of course, anything can happen. You always have to stay open to that. And if the markets do correct to the upside even a little bit, every once in a while I'll get a very nice pop in the relative strength stock that I'm in, and vice versa for shorts. So there are times when I won't do anything, but I'll always be scouring the markets looking for opportunities. So thanks Lomax12 for that. Sahi Mike said, thanks for the video, Matt. Was able to notice the internals not quite matching earlier today thanks to watching your videos over the last couple of months. I was wondering if you could also post a daily S&P chart after closing and give us your thoughts on where it's headed over the next week or two. So again, over the next couple of days here, I will be doing the aftermarket wrap-up, the D7, since again he's on vacation here for a while. Then Breakout Trader is going to take over. So yeah, I can talk to you guys about that. That'd be kind of nice. So here's a good question or a thought from FFD2. I'd like to learn more trading techniques. He's talking about breakouts. His idea is, do you just place your buy limit order above the base and weight? Do you only day trade with this technique, or do you look for high bases on daily charts as well? I've been trying this technique with paper trading, been fooled with head fakes several times. How far up from the base is a good point without sacrificing too much of the move? So that's a bit of a mouthful. There's actually a stock today that's has just put in a nice high base and a good breakout intraday. Again, full disclosure, I'm in this stock, so this isn't a recommendation to buy. In fact, it's been up many bars in a row, but this is the definition of relative strength. So if you compare this to the S&P 500 today, big gap down, nice rally, but then we're kind of chopped around sideways like we talked about in the previous video. If you look at this guy, he's retraced that gap completely, plus some, and he put in a high base. And some people would call this a symmetrical triangle, but it's still a high base. See that? It's past all resistance, at least on this 3-minute chart. Again, you have to take that with a grain of salt. But I would always look back in time to find out what's behind me being resistance. So big move up here, nice breakout. I actually watched that happen, and it's kind of nice to see that. On a daily chart, that's almost a double top, right, from this previous area right in here. So about the 120 area. And you can also zoom out on a daily chart and see what we're running into. I've got the 124 on here as pretty good significant resistance. And the 124 area came from a weekly chart. And that's exactly where, if it keeps on this tear, it's going to hit the 50 MA on this weekly chart. So how do you start from a 3-minute chart and go all the way back out to a weekly? It's just information, right? But if I'm going to be trading on an intraday basis, all I want to make sure is this breakout is not going to be taking off into a bunch of overhead resistance. And one of the only ways to do that is to assess more data back here. One way to do that, of course, is either to scrunch this chart up or look at higher time frames and scrunch that up. Again, I'm just going out until I see what it is. That's the first time I can find it. It's past all moving averages. They're all declining, of course, but now they're starting to turn around a little bit. So with a big move like this, I've got a much better chance of making a higher swing low on a longer term basis. Maybe I even make a nice high base intraday for a while. But now I know where my overhead resistance is on this chart because I took the time to go back and look, and that can really help out your intraday trades as well. Because then I'm not buying long into a breakout right into overhead resistance that I wasn't perceiving because I can't see it on the chart. So just take a little bit extra time to find out what you're about to trade into, and that's really helpful. Good. So that's one way to help avoid head fakes. Like any pattern, there's always going to be a time when they don't work out, right? So you always have to have protective stops in place and make sure you get out very, very quickly without fail, and make sure you trade with the size that you're used to. All right, so that's another big one too, because sometimes when people end up upside down in a trade, just talking psychologically, it's hard for them to exit. However, when they're going in a trade that's in their direction, they're making money, it's easy for them to exit, and that's actually the exact opposite of a way that I would want to trade. It kind of puts you at odds with yourself. So anyway, good things there. So there are other chart formations, like we talked about high bases, there's low bases, there's ascending triangles, there's descending triangles, there's symmetrical triangles basing on their high, symmetrical triangles basing on their low, there's pullback buys, there's pullback sells, there's 30-minute gap strategies to the long and short side. Those 10 patterns right there, 5 long and 5 short. Of course, you want to always look at the opposite side of the market, right? Those are really, really nice, and again, you can be right a lot, you can be wrong a lot. It's what you do once you get into a trade that makes one of the biggest differences, of course. So in any stock right now that's running up into a declining 200 MA is something I would watch out for, especially something like an Apple. Again, I'm an Apple, so again, this is not a recommendation to buy. But when you look at Apple and a big run-up like this on a 3-minute chart, it's like, oh, why did it stop here? All you have to do is go back and look, and you'll see why. So here's your declining 200 MA, big red, running into resistance, big swing high here, another unfilled gap back here. So not a lot of people are going to be wanting to buy long into that after a multi-bar run-up. I may have mentioned that yesterday in my video. So a sell-off like this, especially when the broad markets are a little bit under pressure, is not at all out of the realm of possibility. So anyway, that's exactly what I would be looking for, and why I wouldn't have bought long toward the end of the day yesterday and held it overnight, because even if I get a breakout over this 1, 2, 3, 4 bars straight up in a row, I've already missed that trade. So unless I'm going to do some scalping or some very quick day trades, I'm going to avoid these kind of situations. So I would wait for a stock to get past the 20 MA, the 200 MA on a daily chart at least. Make sure I'm not about to run up into any resistance on a larger time frame or weekly chart, and wait for breakouts. Wait for ascending triangles, symmetrical triangles basing on their high, and trade either short-term or take a longer-term position with less shares and a wider stop, and start working your way into that in a bigger way. Pretty cool. So thanks FFD2 for those thoughts and ideas, and I think you've probably helped other people learn something as well. Let's take a look at a couple other people here, and then I'll stop this video. I guess one more point. You were talking about the way you enter and exit stocks with buy limit orders and things like this, and protective stop market orders. That would be probably a whole separate video, so I'll jot that down and maybe work on that for you guys coming up here. Let's see, one more here, JOYELL 777. So do you and the other analysts here at FTV make posts when you see the trend VIX and other indications lining up for possible good entries? Usually my noon videos, I'll make some kind of comment about whether the broad markets are mixed, the internals, or if they are not, and in that case I will say something about it. I'm not sure if the D7 or Breakout Trader talk about that too much, but I could start spending some more time on that as well. Again, all these comments in here are unbelievably helpful, because you all are the people we're making videos for. So the more you tell us, the better we can cater to your desires. And here's an idea by ALCIE. One thing, if you watch D7's previous videos, he always has a series of trend lines I find useful. Is there any way you can reproduce those lines and give us your thoughts? Yep, I'll do that this evening as well. And thanks for the compliment. And Dante Lemus, I hope I'm getting that right. I'd also like to see some trend lines to watch out for, resistance and support. Very, very good. So I'll make that happen this evening. So great stuff, everybody. Thanks for your comments on this video yesterday. And again, I'll be talking to you later. Further comments, of course, are welcome.